sure you have heard that the forex exchange market is a multi-trillion dollar a day industry. I think today the stats is around $6 trillion, 6 trillion US dollars are moved in the market, forex exchange market, every day. A huge amount. And obviously many people at some point wonder what really moves the market, what moves prices. When you are looking at the charts and you see a price moving on any pair, what really is moving that price? That's what we are going to talk about in this video. By the way, if you are new on this channel, please consider subscribing so that you do not miss future videos. Go ahead and like this video. That's the only thing that I'll ever ask you to do. Otherwise, I don't ask you to buy anything. I don't sell you anything. Everything that we give out on this channel is for free. So feel free to watch other videos on this channel after you finish watching this one. I'm guaranteeing you either you're going to learn one or two things, or we are going to entertain you. If you are looking to download stuff, forex robots, indicators, books, and stuff like that, there are links in the description box below. Visit those links and see if you cannot find what you are looking for. Many people also ask me about the broker that I use. See the link in the description below. So let's get back to the subject of our video today: factors that move prices in the forex markets. You probably come to a point where you are wondering, wow, what really drives these prices? Why is when you look at the charts, you see candles going up, candles going down? What really drives these prices? So there are major factors that you need to look into that really move the markets. A major factor that does drive prices and can give you an indication of where price is going to move next, and where and which direction is probably going to take, is usually interest rates. If you love trading the news, if you are always on the lookout for news as a way to make money, or if you want to stay out of the markets during major news, first avoid interest rate announcements or capitalize on interest rates announcement, because usually after interest rates announcement you find that you get a picture of where that currency is heading, whether people are going to sell the currency or whether they are going to buy it. So the first thing that you need to watch out for, a major factor in the forex exchange market, is interest rate decisions by the Fed or by countries' central banks, the Bank of England, and because interest rates generally give you an idea of how that country's economy is performing. Usually, if that country's economy is actually performing well, you find that interest rates tend to go up. When that country's economy is performing badly, usually interest rates tend to go down. So if you have an idea of whether the next announcement they are going to increase interest rates or they are going to cut on the interest rates, you probably have a better idea of where prices for that pair, for that currency, are going to go, which direction that currency pair is going to take, just by your analysis of the interest rates. Okay. The other factor that also has an impact on price movements on currencies is also the country's what economic data like GDP, unemployment stats, and stuff like that. Because these are also kind of what are linked to interest rates, because all these factors help to build a picture of how the country's economy is performing. Again, if you find that they are cutting a lot of jobs in that country, it means the economy is not working, it's not performing well. If the GDP is falling, then it means things are not moving well in that country. And you find that what, in the end, it also ties into interest rates. Then they are forced to cut down on interest rates. And what does that mean? The interest rates, as they go down, that currency tends to lose value. So first interest rates, then watch out for major economic data, GDP, unemployment, employment, and such economic data. I think if you go onto my FX book or Forex Factory, you actually see which kind of news actually is important or to not. Usually it's either in red or in 3 stars. Then another factor that basically also moves prices in the markets, if you're just watching your charts, is political announcements. Sometimes you find that markets tend to favor a certain political party. It's unavoidable. Sometimes markets favor a certain political candidate or a certain president, and there are certain policies. You find that, for example, maybe we have a president that is loved by business, and that president's policy are pro-business. You find that the markets will be like doing well, everything is going up, and if the economy is doing well and people are putting in money, obviously the interest rates what will go up, and people what will buy the currency and stuff like that. So you kind of have a general idea of the direction what that currency is going to take. But if we have a bad president, as an example, or a president or a candidate or a political party that people don't like, you find that the markets like are in turmoil, people are pulling out their monies, and in the end, the government or the central bank is going to be forced to cut what? To cut interest rates. And in a way, that means that currency is going to lose value and the price is going to continue going down. And maybe there's a coup, a military takeover, or things like that. Political announcements have an impact on price movements in the markets. A recent example is if you saw the invasion of Russia when they invaded Ukraine, gold suddenly spiked up. Why? Because it's considered a safe haven currency, and people were what? Dumping the Russian ruble, and they were buying gold, they were buying US dollars. They basically dumped the Russian ruble. And weeks later, what happened? Russia said, "Hey guys, look here. If you're going to buy our gas, because unfortunately or fortunately, Russia is a major producer of gas in Europe. They said now if you're going to buy our gas, you are basically going to have to pay it in Russian rubles." So you found that the value of the Russian ruble started picking up. Why? Because Russia forced an artificial demand for their rubles, for their Russian ruble. And then what? The Russian ruble started picking up. People started buying more rubles because people want to what? To buy Russian gas. So these are announcements that you need to really watch out for. Then other things like natural disasters. Of course, you cannot predict these natural disasters like earthquakes, like the pandemic. You saw what the pandemic did to the markets. Uh, these are natural disasters that sometimes you cannot foresee, but they do have an impact on the markets and how the prices of currencies are going to move and in what direction. So these are some of the factors that you need to watch out for. Important: interest rates, then economic data, then political announcements. Then just keep an eye out for things like sudden natural disasters and stuff like that. These things will give you an idea of where is price is going to move next and which direction is it going to move in. So are you going to be buying or selling that currency? I hope this quick short video helps you understand what moves the currencies and the prices in the markets. Otherwise, if you have any thoughts or anything that I left in this video, leave it in the comment section below. Subscribe if you're not yet subscribed. Until next time, bye.